Hi folks, welcome to this video on fair value through OCI investments. In this case, your question's a little bit different. This company has only one investment in its fair value through OCI investment portfolio. It has the shares of only one company. So, they've given you the original cost of the investment and all the fair values at the end of each of the 3 years, 2017, 18, and 19. What we need to do, first of all, is to prepare adjusting entries at the end of each year in order to set the portfolio to its fair value. And don't forget, our portfolio only has one company's investments in it. And then what we need to do is calculate the value in our AOCI account in the shareholders' equity section at the end of each year. And then we're going to have a sale in a subsequent year of the fair value through OCI investment. So let's begin with Part A. First of all, we can see that our original cost of the investment was $39,900. At the end of 2017, our investment now in the stock market was worth $41,750. So we have an unrealized gain or loss credit in our OCI of $1,850, and our fair value through OCI investment goes up by $1,850. That's the difference between the cost and the fair value. At the end of 2018, we have our fair value through OCI investment sitting at its most recent carrying value, which is what we adjusted it to, $41,750. However, the fair value's dropped. At the end of 2018, it's $32,200. So now the difference between these two amounts is $95.50. So to set our fair value through OCI investment at $32,200, we have to debit the unrealized gain or loss account in OCI and credit the investment account by $95.50. At 2019, we have our investment sitting at $32,200, but we know the fair value at the end of 2019 is $36,400. So what we need to do is we need to adjust it upwards by $4,200. So we debit the investment account, and we're going to credit our unrealized gain or loss account, which is an OCI account, by $4,200. Those are our entries. Now, Part B is a little bit more of a theory question, to be honest. It's to determine the balances in AOCI at the end of 2017, 18, and 19. So you have to think back to some of the theory. We had said to you much earlier on in our course that all OCI unrealized gains and losses, they adjust AOCI. Just like income, net income adjusts retained earnings, OCI, or those unrealized gains and losses, are always updating AOCI. So if we went through and counted up all of our OCI unrealized gain and loss credits and debits, we should get our ending balance in AOCI, right? Well, isn't that the same as taking the fair value of the investment at the end of each year and comparing it to the original cost of the investment? Because every time you book an unrealized gain or loss, you're taking the investment from its most recent carrying value to a new carrying value. And at one point in time, the original cost was the fair value, right? It was the fair value. All you're doing is taking it from its initial fair value, which was cost, to its up-to-date fair value. So, if I looked at the original fair value, which was $39,900, and I've now got a new fair value at the end of 2017, doesn't that mean I should have $1,850 in my AOCI? And if I look at my original fair value at the date I bought it, which was cost at $39,900, and compare it to my new fair value at the end of 2018, doesn't that mean that I should now have an AOCI debit because my fair value at the original date I bought it was greater than the fair value now? So that means I have a cumulative unrealized loss, right, of $7,700 sitting in my AOCI. And if I compared my original fair value, which was my cost, to my new fair value at the end of 2019, cumulatively, I should have cumulative unrealized losses, which are building up in the shareholders' equity section in AOCI, of debit 3,500. If you want to see it in a T account for the AOCI account, let's have a look. Again, we know that when we recorded the unrealized gain or loss credit right up here for 1850, and the shareholders' equity side of it in AOCI, it got built up to 1850. We also know that in 2018 we made an adjustment, right? We brought it down in 2018, so we debited the unrealized gain or loss because our investment went down from the new value at the end of 2017, the new carrying value 41,750 to 32,200, right? So doesn't that mean that if we compare the 9,500, or if we put in the $9,550 adjustment, because when we debit our unrealized gain or loss account, that updates our AOCI by debiting it as well. And now we're going to have a net debit balance of $7,700, which is exactly what we would have if we compared the original fair value to the current fair value. Now, we also know that at the end of 2019, the portfolio went from 32.2 to 36.4. 32.2 was the most recent fair value or carrying value at the end of 2018. So it's gone from that value of 32.2 to 36.4. So that means that if we made that $4,200 adjustment, which we did, we credited our OCI account. And don't forget, that also updates our AOCI by crediting it. That's going to leave us with a net debit balance in AOCI of $3,500. Isn't that the same as the difference between the original fair value, which was the original cost, and the fair value of the investment at the end of 2019? So that's a little bit of theory. All right? So you might want to pause the video now just to make sure that you get that concept. Because now we're going to move on to Part C, and we're going to look at the sale of these investments. So now, here we are, Part C. February 13th, 2020, we sell the investment. The question tells us we sell it for $38,000. Well, don't forget, at the end of 2019, the journal entry we made brought it to $36,400. Well, the first thing we need to do, don't forget, when we're selling a fair value through OCI investment, we have 3 steps. The first step is to adjust the fair value through OCI investment to its fair value. Notice here it's a little bit easier because we don't have any brokerage to consider. So in this case, we're going to adjust the investment from $36,400 to $38,000. We achieve that by debiting the investment and crediting the unrealized gain or loss OCI account by $1,600. Now don't forget, we sold the investment, so now that we brought it up to its fair value, now we're going to sell it. It's now, after we make this journal entry, it's now sitting at $38,000. So we take it off our books at $38,000 and debit cash for $38,000. Now that we no longer have the investment, now all of those cumulative unrealized gains and losses can now be removed from our books. And remember, in class, we liken this to what we do with fixed assets. When you sell a fixed asset, machinery, equipment, building, you get rid of any accumulated depreciation that you've been holding on that asset too, right? Same thing here. Whenever we sell a fair value through OCI investment, we have to realize that any of those cumulative unrealized gains and losses that remain in our accounts as a result of that investment also have to be released. So what would we do? We transfer them, because it's without recycling, we transfer them or reclassify those cumulative unrealized gains or losses to retained earnings. So, do we have an unrealized gain or an unrealized loss? Well, if we understood that Part B theory, our original cost was $39,900. We dumped it for $38,000. So cumulatively, we have an unrealized gain or loss debit, all right, of $1,900. Well, to close out that debit, we need to credit it. So that's going to zero out that cumulative unrealized gain or loss, because we have a loss in the account. We know we do, because it went from $39,900, which was our original fair value, to our current fair value, which was what we sold it at, $38,000. So we know we have an unrealized gain or loss in that account right now The cumulative unrealized gain or loss account of $1,900, debit. So in order to close it out, we credit it and we debit retained earnings to reclassify it. If this part is a little challenging for you to see, let's have a look. Don't forget, let's trace it through a cumulative unrealized gain or loss account. Remember, we credited the unrealized gain or loss account when we moved the investment from $39,900 to $41,750. We credited the unrealized gain or loss for $1,850. Now, at the end of 2018, I'm just going to go back up here to the entries. We noticed that our OCI investment was sitting at $32,200, but we, at the end of 2017, by doing this $1,850 adjustment, moved it to $41,750. So we had to debit the unrealized gain or loss to bring the investment portfolio down by $95.50. Well, that adjusted our unrealized gain or loss by a debit. You'll remember too, we raised it from $32,200 to $36,400. So at the end of 2019, we actually processed a credit, right, to the unrealized gain or loss. So we adjusted that OCI account by $4,200 at the end of 2019, right? Well, now we had one other adjustment we did in 2020. At February 13th, we updated the investment to its fair value. So there's an extra adjustment we did here to update our OCI account, and that's for $1,600. So if you put that in there, you can see we have total credits of $76.50, a total debit of $95.50. So we have a net debit balance in the unrealized gain or loss account, that's your OCI account, of $1,900. That's a debit balance. So that's why I said here we're going to reclassify the cumulative unrealized loss. This guy is this unrealized loss. But don't forget, I have to reclassify it to retained earnings. So if I credit that, then it's going to leave me at zero. So I'm going to credit that unrealized gain or loss, and then I'm going to debit my retained earnings to reclassify it to retained earnings. So that's how I handle the account, or handle the reclassification of the cumulative unrealized loss, which we've proven to you, hopefully, is $1,900, right? And that thing, in order to zero it out, has to be credited, hence this guy here, right? And that means if I credit it, I'm going to debit or reclassify that loss to retained earnings. So this concludes parts A, B, and C. What I'm going to do for you now in the next video is I am going to do the statements with you. So stay tuned.